Hi, good morning and welcome to my morning report analysis videos on Tuesday 14th of March with me, Rich Perry, market analyst at Handtech Markets. We're relatively settled again on markets. There's so many key fundamental and news flow factors that are sort of now and impacting the markets in the near future that there's a little real sort of prospect of giving too much sort of decisive direction in these traders. You've got the Fed, which starts its two-day monetary policy meeting today. Further to that, you've got three other major central banks giving monetary policy on Thursday. You've got the BOJ, the SNB and the Bank of England. And you've also got this sort of Brexit decision, possibly, that we could see Article 50 being triggered in the coming days. And now add into that whole mix, you've got the Scottish Referendum, which is being threatened, or a new Scottish Referendum being threatened by the SNP in the UK. So we're seeing basically markets at the moment just consolidating. What we have got, this is Wall Street, the S&P 500 is basically just consolidating for the past few days as it sort of pulls back to that uptrend. Nothing too significant, but look at these Treasury yields, which the two-year Treasury yield has broken out and remains broken out decisively, so the market continues to sort of price in this rate hike from the Fed, which would be in tomorrow's meeting. But look at the 10-year yield under 264, that remains 264 is the key resistance for a breakout, and all that sort of is helping to support the dollar once again. The dollar found a low yesterday and has rebounded and continues to sort of make tentative gains today, but the big mover of the day is sterling. On the back of this threat of a new Scottish referendum, sterling has started to fall away again, broken to new sort of multi-week lows and threatening to move back towards the lows of the medium-term band, but I'll talk about that in my analysis video in a bit. But certainly that is a key focus for today. Now, in terms of economic announcements, we've got the German ZEW and the US producer prices index, or PPI inflation. That is ZEW at 10 o'clock. 13.1 expected there. That's sort of basically around about where we've been in the last sort of few months. So that's showing or suggesting fairly solid improvement in German growth coming forward. PPI inflation expected on the headline to improve to 2%, and that would be the highest since May 2014. So that would be continuing this sort of drive of increasing inflation, and certainly that would be sort of playing into the whole Fed tightening arguments there. So let's look at my chart of the day, which is the Kiwi dollar. Now, we have seen the Kiwi dollar starting to form a little bit of a basis of support, and that basis of support coming around 69 big figure, and I'll show you the interesting importance of 69 big figure being this sort of old breakout. Became sort of supportive back in December, January, although marginally broke to the downside, 68.60, but still 69 figure again seems to be around about where the market is coming back to. It hasn't yet closed below 69 figure. Sort of consolidating the last few days, really. There was a sign yesterday early on that the market was beginning to sort of tick higher. The RSI, as the market was sort of pushing towards test of 69.50, the RSI was sort of breaking back above 30. That sort of disappointed into the close, with the market falling away, and again today. But that 69 figure level seems to still be a basis where the market is sort of attracted to. You can see here the hourly chart basically is trading sideways in the last sort of few days, and you've got that range between 68.87, 69.50. So if you did break above 69.50, you could sort of target 60 ticks higher in a recovery, but to be honest, the market is still just consolidating. It's not really showing direction either way, although the MACD lines have just turned negative, so that sort of comes with this pressure on 69 figure today. I think a close below 69 figure again would not be great. Start to sort of put real pressure back to the downside, but for now the market is sort of in consolidation mode, really. And I wanted to sort of talk about the stochastics, really, because every time the stochastics give a buy signal, crossing higher and then back above the 20 level, that is your confirmed buy signal above the 20 level. every time you get that, the market goes on a pretty strong bull run. So you'd be looking out for that, I think. We've seen the stochastic starting to bottom. Yes, it sort of can do that for a good few weeks, a good couple of weeks before making a decisive recovery, but it certainly seems as though that if this is going to continue to be a range play, which there isn't any real suggestion that it isn't, if that is going to continue to be a range play above 69 or around about 69 figure and above, then this is around about the time at which you're going to start to see the support coming in. RSI sort of buzzing around the 30 level. So these are all indicators which would suggest we're on a bit of a sort of turning point, possibly another crossroads, whereby you either see the market breaking decisively lower below 69 figure or starting to recover. We're seeing that consolidation which could play that crossroads out. So I wish you good luck in your trading today, and I will speak to you later. Thank you.